Yeah, the FANG names as a group are up in the 20%, give or take. And I think from year to date, I think Snap's even up like 150% or so. So you've seen a strong movement. What I think is really interesting is that you're seeing investors that are looking for incremental alpha and growth, right? And coming back to tech, particularly in an environment where you may have interest rates coming down to get more value out of that. Now, when you think about the IPO environment, which I think is critical, you've had a good series of IPOs that have taken place, really mostly in Q2 is where it really kicked off. And if you look at the performance of those tech IPOs, they're up about 50%, give or take. Now, if you take out ride sharing, it's up almost more like 80%, give or take. So you're getting this great alpha for portfolio managers. They're trying to catch up to the benchmarks for year end.
What's your read on what happened with ride sharing? Was there something about lack of profitability and lack of clarity about the business model? Because I don't think a lot of people expected both of those to do what they did.
Yeah, I think the questions for all of these companies come down to the unit economics. I think investors just want to get a feel for what the underlying unit economics are and really just sort of hit some traction here and show progress to profitability, and that would get investors more comfortable. Some of these other stories that you've seen, though, you have profitable companies coming out. You actually have top-line growth and profit. So investors really love those stories as well. But you can just see by the performance of these IPOs, it's extremely interesting. One other thing to point out, too, is if you look at the performance of IPOs from the first day pop to currently, you're up about 1,400 bips, about 14 points, right? Now, if you pulled ride-sharing out of that, you're up 25 points, right? So you can see these portfolio managers are really getting this incremental alpha.
I want to go back to low rates for a minute
because
you just pointed out if you see rates going lower, staying lower for longer, that incentivizes growth, and that means tech stocks.
Yeah.
But it also means potentially more capital in the private market. So what does it do to the IPO pipeline?
Absolutely great question. So when you want to think about two things there, one, it also sort of fuels M&A, right? So M&A, we're about $2 trillion or so right now, on pace for about $4 trillion of M&A, which would put you at one of the best markets we've had since 2015 or so. So you'll have capital going there for M&A. Cheaper cash is a way to get M&A done. You're also seeing, as far as premiums, right? Premiums have been pretty consistent, so these companies aren't overpaying, somewhere around 30% or so for premiums. To your point on private capital, I think it's really interesting to bifurcate the public capital valuations with the private capital valuations. So when you think about public company valuations, as I mentioned, FANG before, trades somewhere in the low teens or so, 12, 13, 14 times or so. When you think about private valuations and capital that's going there, I'll leave you with this anecdote from Jeff Bezos. When I met with Jeff Bezos a couple of years ago, I asked him, I said, how do you think about investing? And how do you think about milestones to see if what you're spending your dollars is right? And he sat there and he said, you know what? I only really care about one thing. I care about the net present value of future free cash flow. And I think that's obviously the value of a firm. That's obviously the value of a stock.
He's been saying that since day one, by the way.
He has, exactly right.
Letter
exactly right.
1997.
And when you think about the VCs and the private capital that's investing, I think that's what they're thinking about more. It's not about what's the multiple on next year's numbers. It's how big can this be and how big can the profitability be when you think out a couple of years. So I think you're going to see continued money flow into private capital, but there is a nice set of companies that are coming for IPOs for the second half this year and into 2020.
When you put it that way, you can see why the private market valuations on the rideshare companies maybe have been different than what the expected valuation would be in the public market.
Yeah. But then you can take a look at something like Slack, right? So Slack's private market valuation was half almost, or at least 2/3 of where you are today. So it depends when the last rounds were done and sort of what's also baked into some of those valuations. Sometimes there are things like preferred rights and other things that are in there that don't make it apples to apples.
What's the lesson of Shopify?
Yeah.
It is up 47% over the last quarter, just about neck and neck with eBay now in market cap. A lot smaller than Amazon, but this is a company in e-commerce, which, by the way people talk about it, you would think Amazon has all locked up. What are they getting right?
So I love the question. There's a couple reasons why. When people talk about blockchain and crypto and all that, they talk about decentralization, right? And what I think you're seeing now is a decentralization of marketplaces in e-commerce, right? So you don't have to be just on Amazon or just on eBay. And the rise of DTC is now creating all these new business models with particularly great unit economics that allows you to spend against that and grow these businesses. Shopify obviously is enabling all these smaller businesses, empowering this whole decentralization of e-commerce. So I think it's a very big theme right now. You're seeing a lot of companies benefit from it, including Shopify.
Is that what Facebook is going after, you think, with Libra also? Because they've got a marketplace. They want to be in the midst of these transactions, so it's not clear exactly to what degree they want to be a retailer.
Yeah.
Is that part of what investors should be thinking about with Libra?
I think that's part of the thesis. And while I'll let the crypto and blockchain people talk more about Libra, what I think is really interesting is when you just think about scale, right? Over 2 billion people on Facebook, and what you can do with that scale when you have some sort of means of bartering attached to it. It provides this power that a lot of the smaller marketplaces don't have. So I think it's very interesting what's happening there, particularly when you look at the partners that are partnering with Facebook. It'll be interesting to watch this one.
Chinese or U.S. tech stocks, especially with these trade talks afoot right now?
So the U.S. tech has done phenomenally, right? When I mentioned some of the performance already, so up 20%, et cetera. The IPOs, up over 50%, et cetera. When you think about what investors are thinking about, they're on the negatives. They're thinking about trade, they're thinking about tariffs, and they're thinking about regulation, all three of those, right? And they're coupling against that the growth, FOMO, and the incremental margins that are coming out of the U.S. So they're balancing these things together and making their choices that way.
I have to ask about my pet area of focus, M&A.
Yeah.
I mean, so often people want to convince me, well, Apple's finally going to do something big, or you name it. You just fill in the blank. They're going to do something large, whatever company it may be, that is already enormous.
Right.
I would think with both the antitrust focus and for any number of other reasons, that's really not likely.
Yeah, it's a great question. I can't comment specifically on Apple, but what I can say, exactly what you just hit on, is what investors are thinking about. It's because of the regulatory environment, there's a restricting sort of larger M&A that could be done, particularly in those big FANG-type stocks. What's interesting, though, when you look at M&A, for the first time in recent years, North America or U.S. become a greater percent of global M&A, and tech and internet has recently passed all the other categories and verticals for percentage of deals being done in M&A. So you're really seeing a focus on U.S. tech, particularly within M&A.
Well, software as a service is
software,
huge.
absolutely.
How much is the U.S.-China trade tension hurting stocks like Alibaba, like Pinduoduo? Because we talk about it not hurting the U.S. internets that much. How much is it hurting the Chinese internets?
Yeah, I think it restricts it a little bit. It's one of the things that investors are weighing, right? Particularly to David's point there on M&A, if there were some larger M&A, particularly domestically in the U.S. I think you can continue to see M&A by those Chinese players internationally, but not necessarily domestically in the U.S.